What do you got for us here today?
All right. Why don't we go to Rigetti first and let's take a look at what's going on. We've got the daily chart here, and it has really exploded. We know it's a lot of news coming on the back. Everybody's jumping on the OpenAI bandwagon.
Yep.
I think OpenAI is going to really push forward what happens in the quantum field. We're still going to need a lot of things like lithium and copper. So we'll talk
Hmm.
about a couple of those as well.
Perfect.
But let's take a look at what's going on with the cumulative delta for Rigetti. It's at one of the highest levels that I've seen, certainly all year. And so it is at the top of the range. We are seeing some divergence with my chat GPT oscillator come in, and the accumulation swing index puts it really high comparatively speaking. So it's sitting at a spot where a pullback should be nice, but at the end of the day, if these guys are sitting in a hot spot, we've got a longer term trade that's going to be great upside. So let's take a peek at what we've got. So let's go to you first because we're looking for risk defined exposure to the downside that's going to give us some cash. And then we're going to look for risk defined upside, but a long timeline. So, first of all, here we have if you want to try November, I have a 1 by 3 by 2 butterfly, $1,000 of upside, less the 79 cents to buy the spread. So it's a 1 at 25, a 3, we're going to sell 3 of them at 15, and we're going to buy 2 at 10. And so completely risk defined, and look at it jumping around. You could probably put it in there for 75 cents, see if it'll fill.
Okay.
There's a fair bit of volume sitting around there also. So when we were talking just a little bit ago, and you started pointing at Rigetti and you said, man, I really want to short this, I went to the October 31st and I looked at this spread 36, 33, 30. And you might say, gosh, that's only $3 wide. It was 20 cents when I first put it up there. It's now
Wow.
52. I would say throw in the 20-cent stink bid,
Okay.
and maybe this position will give us some nice opportunities on that pullback into fair support. Here's the next thing. Let's
Okay.
say we think this is actually going to run and it's going to fade and then expand. What I've got is another 1 by 3 by 2. Now you're saying, why are you doing a 1 by 3 by 2 versus a 1 by 2 by 1? And it's because the implied volatility is so high. If we just went outright and bought the spread or just bought the call, it would be dramatically expensive for us. And so, what we want to do is give the chart a little bit of room to jockey around and give us a chance to move to the upside. Again, I think maybe 70 cents to put in at this one. It's moving anywhere from 58. Look, maybe put in the 58 dollars for $1,000 of upside. Yes, you're going to sit on it for a while, but what it's doing is allowing you to position for potential upside way down the road while using the options to pay for all the noise that's sitting in the chart. So I really, really
Hmm.
like that. Now, here's the one that I am going to put on. This one is giving it some time. Again, it's got about a year and a couple of months on it. I'm going to do the 50-60 back ratio, but I'm selling it. And so I'm buying one of the 50s and selling two of the 60s. It's going to give me a $1,300 credit. And I'm going to sit around, let it flex. If it pops into 60, I'm just going to cover the spread and take whatever the difference is that I have left, or I'm just going to buy a 65 underneath it or open up a brand new back ratio underneath it so that I'm able to capture it as it moves up. Because there's so much volatility here, if you've got an account that can manage this kind of position, it really looks pretty sweet to me. So
Okay.
that being said, that's what we're staring down there. I like it. If you want to trade multiples of this 31st of October, you certainly can, but it looks easily like you could get a really cheap bid in there and make 3x on it, no problem, in the likelihood of what's going on here, because it is got a tremendous amount of volatility, and the accumulation distribution line for this swing index that I've been watching, because I'm always looking at how other pieces can tell us what's going on in terms of who's moving in, who's moving out, and the strength of the move in. And it looks like it's time for this one for folks to come in and go, you know what? I think I'll take a little bit of profit. So that's what I'm saying. And today we've got 90% sellers as it currently sits off of this high breakaway. Last thing, it's about a $10 move from, well, actually, it's about $15 out of this range that it's had since, where did it get in there? December of 24. And so that's a measured move at that 38. So I think you're right on the money about this thing coming in. I think it easily comes into 34 and very likely the 28 level, which is
Okay.
why I like that 25 15 spread a little bit better.
Okay. So I know we used Rigetti as the example, but could you apply this same thesis to some of the other quantum names like IONQ or QBTS?
Absolutely. Let's QBTS does not have an option chain, do they?
I don't know off the head. I just
I don't
listed the
think they
quantum
do.
stocks. You're probably right about that.
Because I think I own
No,
this one.
QBTS does.
Oh, they've just put them on.
They
Ah,
actually look pretty robust too. IONQ, let me check that
yes.
for you. That also has a chain. That's actually a
Absolutely.
little bit lighter.
Let's look at QBTS. As you know, I bought this way down here, and so it's been very, very good to me. Um, this is a shocking / ridiculous move as far as I'm concerned, but it's got an earnings event on November the 13th. Volatility is pretty spiked. We can see the seasonal motion suggesting a fade. Also, that fade should come back to old resistance, which is new support. That's right at the 30 line. So let's have a look. Why not?
That
Let's go to right after earnings and let's see where the traders are setting up. Okay, we've got 3,000 of them at 25. Yep, that's the most of them. So if we are thinking to ourselves, what gives there? We could easily say, all right, why not buy? What could we do here? Let's see. It wouldn't be as cheap here. So let's see. If we did a 30, 25, 20, 87 cents. That's not bad
that's not
for
bad. Yeah.
into earnings. Yeah, absolutely. $500 upside. for $87 of risk. We certainly could do that. They really are pretty, yeah, that implied volatility is so absolutely gorgeous. It um, might not be a bad idea to oh, that one might be a little risky. Yeah. Yeah. My thought was, hey, why not buy? They're looking at 41. If you're thinking, hey, what if it moves up and then stalls out? Easily, the 41.45 back ratio gives you a $280 credit, uses $960 of risk. For me, I'm always looking for the credit because that's where a lot of my revenue stream comes from. So I'm thinking that. But as far as it goes, again, if you're looking way down the chain for what could happen, look at how much, there's a ton
Yeah.
of interest down
Oh
here,
yeah.
right?
And you'll notice, is it like that on the put side? Scroll up a little bit. See if it's like that on the put side.
It's not really.
Yeah, you have to really get to those 20 handles before you
Yeah,
get it.
exactly. 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 So, again, here's the thing. If you want to be put to this and you go, all right, I know the baseline is near 20. What if I bought the 20 thinking it was going to fade and I sold two of the 15s? If it comes down, I get put to the stock at $15. I get $1 credit and I get $500 for it moving down. So literally, I'm in the stock for $10. You see that?
Yeah.
It comes in there. So absolutely some pretty solid ways to play it. You want to be a little careful for those of us that go, hey, I just want to buy long calls or long puts. This is not the place to do it when you've
Yeah.
got implied vol sitting up over 100, and the further out of the money these things get to, I mean, the vol is insane. It's incredible. It's 170 with spreads that you could drive a Mack truck through.
I was gonna
So
say.
yeah, so that's it for that one. Let's look at what's happening in utilities right now. So when we first came on together, we were looking at the charts, and it's a mixed bag. It's bifurcated, right? But to me, here's staples, right? Those are green. Here are our hot movers, looking a
Yep.
little bit
Big
red.
cap tech. Yep.
Looks a little risk off today, right? And utilities. So staples and utilities getting a little bit of rotation here. And so let's take a look at this energy space that I like. I like NextEra. I think they're in a toppy formation, right? So they could have the rotation. Looks like there's rotation into February to the downside. So there's an upside pressure event potentially engaged, and we've got earnings on the 23rd. Where is accumulation distribution? It's very high. Normally, when it gets up to this peak and it tops, it gives us a little bit of a fade. Where's the last area of really heavy congestion? It's around that 75 area. Would not be surprised to see this fading action in the future, but staying bullish in the near term. So how can we say that? In general, that's bullish further out in time and bearish closer to time. And so let me double check, make sure I have that number right. 75 on the fade. And let me see what the daily says here. Yeah, 75 November. Perfect. Okay, so this one, we actually have this fade action. I'm going to take it out to December.
Okay.
It's only 25 cents on the short side, right? And if we look further down the pike in terms of future motion, our rotation takes us back up into that 90 area. So we've got 85 to 90. I can move that up a little bit. Do that into March. 85. Whoopsie. 95. 105. So that's what we're staring down for NEE. I like it on the short-term pullback. It's very cheap. 23 cents, $23 for $500 of upside. And then after that, we look at how we can position into March as it gets its rise up to the edge.
Okay.
PayPal.
Yes. This is what I've been waiting for.
So here's the thing with PayPal. So look at the size of the base that PayPal has. Look at how long this is,
Yep.
right? Something's coming. And so here's what we normally see when we have cumulative delta that sits very low and ranges. It moves up to the range. I expect this thing to have a really big upshot. I don't know what PayPal has planned, but I'm going to reckon that it's going to be good enough to send it back into these higher levels. So here's another reason. Look at what's happening with the accumulation swing index. So what it does is it sits in this base. The second it gets up over that 2000 level, it's going to run super hot if it does what it did the last time it started creeping up. And notice it has started creeping up over the last few months. We have earnings coming on 10/28. My thought is this: whatever the earnings give us, it's going to be a buy zone. If it fades, it's going to give us a buy. If it breaches, it'll also give us a buy, but we'll have to go further out in time. That is my thought. And so my suspicion in order to deliver that sort of thing is the following. Wow, these have gotten really different since I put them on. All right, so way out in December, we're looking at 95, 105, 115, 32 cents.
God, that's so cheap, Anne-Marie.
32 cents. The put one, when I did it, was 87 cents the first time. But let's see if we can, if it comes in. Let's say it has a little bit of a fade into November. You know, it's going to give us $1 of insurance. If you own PayPal, buying $100 of insurance, not a bad idea. Not a bad idea. Here's the next one. If PayPal has a rocket ship month based on earnings coming across, the 9100 is 59 cents. So there are some cheap, wild swings for the fences that could potentially be moving around here. Longer term, in my mind, PayPal is still proving it's, everybody went, you know what, PayPal, it's washed up, it's da-da-da. People had all kinds of things to say about PayPal, but it's still running around. And
And I still
notice
use it myself.
exactly. Look at the open interest for January of 27. Look at the volume today. Today. So easily you could go to the 100, 120, which is the measured move for this one, and you could do a regular 1 by 2 by 1 for $2. Have yourself $2,000 of upside. If you want to do something that's a little bit more strategic in terms of saying, hey, listen, I'm going to let the traders pay for some of that, it's almost the same price to do the spread in a 1 by 2 by 1. To me, tells me that there are a lot of traders in these higher brackets
Yeah.
trying to position right now. So I absolutely think there's something going on here in PayPal. People are making some big moves further along. You can do the 120 by 135 call spread for $1. $1, right? $100 of risk for a $1,500 upside.
Okay.
All you need is time.
Okay. Big B's here saying picked up some September PayPal already this morning. Now, you mean September of 26, obviously, right? Because September this year has expired. So looks like Big B's is looking at some nearly year-long leaps there.
Yeah.
For PayPal.
Yeah.
Okay. When you're talking, you had mentioned that long base that PayPal has formed.
Yes.
How do you trade options when you see something like that? Because I agree with you. This is going to move. It's not going to stay here forever. But when you're trying to define your time frame, how do you pick a time frame when you see that kind of long base?
So when you first start seeing the base, your question becomes, all right, they're building a base. What is the trade while they're in the base? Now, while they're in the base, you're going to have to do some kind of credit spread, or you're going to burn up all your theta, right?
Okay.
So once it's in the range, like it's been sitting here, if you go for short time frame formations, a credit spread statistically is the best thing to do.
Okay.
When it breaks out of the range, you give it 3 to 7 days if you've got a little bit of time on your hands. And I would say no more than 2-3 months. Give yourself that bit of time. If it breaks out of that range, you should cover it if it keeps out of the range for 7 days. Now, if it doesn't and it falls back in the range, your credit spread works. If you're looking at a spread like this and realizing, hey, not only do I have myself sitting in a wide base, I now have a drift up on my accumulation event. And so you can see right here in the past, you can start seeing the rise in accumulation. And so when that rise in accumulation really starts showing up, your head should go, something's a coming.
Okay.
And so if you move in the direction of the accumulation, you're going to end up going, all right, I need more time. I'm just going to move it out 6 months.
Gotcha.
And I'm going to sit on it.
So if you take one too early, move it out. Okay, really good stuff here, Anne-Marie. It looks like your joke went over well there, so doubly good stuff. Anne-Marie, we'll see you on the webinar tonight. Are you back this Friday?
Yes.
Perfect. Anne-Marie, have a great rest of your Tuesday. We'll catch up with you next time.
See you.